good afternoon, everyone. Welcome at the Trade Academy podcast. My name is Blagoje Pozarkowski. I'm the CEO and founder of the Trade Academy. And today, at this podcast, we have Nicholas Eastham. Thank you, Nicholas, for coming to this podcast for the first time. He is private client manager at SpreadEX. Spread betting broker from the UK, which recently we started recommending it for our clients. So we talked about it and decided to make this podcast in order to bring retail clients closer to what it is trading, talk a little bit about inflation, interest rates, and bring closer a little bit of a knowledge from what actually Nick can tell us from his experience. Nick, once again, thank you for coming to this podcast. And can you tell me a little bit about your work that you're doing at SpreadEX at the moment?
Sure. I've spent the last 10 years, I'm called a private client manager, but we run the premium client division at SpreadEX, something which, we find the more sophisticated clients need a bit more of a tailored service to their needs. We we pretty much do whatever the client wants. We don't advise, we provide the platform. You freely welcome to ask my view. I've been in the market for 20 years, so I clearly have views, but we definitely don't give predictions on trading
Yes.
and what you
Oh,
should
yeah,
do.
understandable. Understandable. Look, it's something that just from an operational point of view, and to clarify about, let's say, potential clients, how SpreadX works, not from the point of view that you need to give predictions or
Yeah,
advice for investing.
yeah.
That's not what we seek. So,
Okay.
I know.
So SpreadEx provides spread betting, which is big in the UK, tax-free product, and CFD, which is available absolutely in the United Kingdom, but it's taxable on gains, and the rest of the world trades CFD. So that's probably what maybe a lot of people on this podcast who are listening will trade, and we do both of those. Um, Fundamentally, at SpreadEx, we provide all the products our clients want to trade, and there really is a lot of them. So if it's from shares, US, international, European, clearly the UK stuff, Irish, indexes is always going to be the most popular. I can go into the breakdowns of what I see of client behavior.
Right.
So all the major indexes, all the major FX, quite a lot of the exotic FX, if that's what you do, commodities, and a little bit of crypto for our um, should we say, professional clients. Me as a manager and my team, we look after everything. So whether somebody's a bit more of an esoteric trader when we need to do an actual trade by a telephone, that still happens. If it's a
Oh,
big
really?
order yeah, it does. It happens more than you think it does, but with specific clients. But like 99.5% of all trades are online. Very much,
As it
you
is
know,
now in this time of AI.
Absolutely. And you're always going to get the best execution to a degree when you're seeing a price on a screen, you click it, you buy it, it's in your
And that's
account with a stop and a limit and this and that. But somebody wants to run an average price over a day, we will do that to facilitate it. And for the premium clients, they
can
want
you
that.
tell me, is it clients who are trading with commodities the most that will call you and say, I want this position to be closed at that price, or it is also present into the other markets as well?
It's predominantly and almost totally shares.
Yes.
Because shares are quite, share of one company. All right, Apple's not a good example because it's massive. It's bigger than the whole UK stock market. But some of the smaller cap stuff in the United Kingdom, yeah, we need to work that. We need to, if somebody needs to get out of a large position, we need to go and find out a few of the bits and pieces about it with a market maker. We trade it on the telephone, um, because they're going to get a better price by doing that. Whereas, you're buying Apple or some Dow or anything, you want instant execution on the screen. So it's really only small cap shares.
Right. It's that, but it's really interesting what you're saying and bringing it up. I really didn't know that even today someone will take the call and say trade this for me or close the position for me. Another question arises now. Can you tell me a bit how this um, professional and retail parts that will affect clients when they register with you, what it is required. So we know that retail, you're getting it immediately, but what it is required at SpreadEX, so one qualify as a professional trader.
Okay, yeah, for sure. I mean, SpreadEX being UK based is under the regulation of the FCA,
Of course.
and although this is determined also in Europe with nuances across the EU states, a retail client has more protections basically, and the default account you'll receive, no matter who you are, is a retail account. And those with more experience who wish to take more risk and have lower margins, and also a different way of how the account is managed, can opt up to be professional. Uh, but you have to have done a certain amount of trading, have a certain amount of experience that you can prove, and then you will be allowed to have that account. But the retail protections, which are pretty prevalent throughout Europe now, we were very heavily regulated.
Right. Yes, yes, yes.
Um, yeah, so you'll have negative balance protection, so you could never lose more than you've put on the account in the first place. If there's a negative balance there, SpreadEx and or the broker who you're dealing with would have to pay that off and reactivate your account. You are paying a lot more margin than a professional, so the likelihood of that happening is going to be a lot less in the first place. But
Yes.
hey, we can't predict what the market's going to do. We wish we could every time,
No,
but
no one
but
can. No one can.
exactly that. And your retail clients just in the main have that protection and pay more margin. Simple as that. You need to put more money on your account to trade to hold the position.
Right. That's interesting. You know, getting the protection sometimes is more important than having the higher leverage that you're gonna get with a professional account, because not always a higher leverage will bring you more, let's say, profitable positions or possibilities for trading. You know, with all due respect, we need to tell that trading is risky and not always, and past performance does not indicate future success for anyone. So it's a very volatile business, let's say, and no one should expect that in continuance they will be able to make profit. Actually, in continuance, many traders have heavy losses on them on their accounts. We can we as experienced traders, we can see that for ourselves as well, and on our accounts too, because over a longer period of time, maybe you can have some type of profit, but it's always very risky, and managing the risk is number one thing that traders should do before they start trading on the stock exchange. And of course, making informative decisions and trades is very important. That's why we are here as the Trade Academy, to bring people a little bit more information to our courses, but also that's why we are partnering with the brokers as SpreadEX in order to
Yeah,
bring the
yeah.
stability on the market that they search for, because not every
And
broker can bring them that stability or experience into handling the markets or providing them a stable platform to trade with.
you mentioned, by the way, something in there which I agree with. So risk management is the most important thing for a trader. You, how you manage what's not going right for you will determine your success. You still need an edge at trading, but if you decide to hold on to losses for longer than you have necessarily needed to, and don't admit you're wrong, you're going to be wrong. You need to admit you are going to be wrong, and admit it quickly. Uh, and hold on to your running trade. So I worked at the biggest broker in the world. I would have thought for 10 years before SpreadEX, and I can
Right.
tell you that everybody has got on their website 75% of traders lose money. But I can tell you for this, most trades win at that broker. Most trades won. So if most trades win, and yet 75% of people, 80%, whatever the statistic is on that particular month, lose money, then why is there a differential between more winners but losers overall? And in that is risk management, pure and simple. And it doesn't matter how you've got your strategy to do it. You need to do it, and you need to stick to it.
Yes, yes. So what they are doing at the beginning and what we are also teaching here is to what you have said. cut the losses as soon as possible, because if you're wrong, you're wrong. You very, very small amount of positions will come back and go on your way. So as soon as possible as you cut the losses, and then you'll be able to think better and make a better decision, a more informative decision, I would say. And what
Yeah.
you have said about the broker you have worked before with, and the people who are trading there, 75%, or let's say you've said most of the trades are positive. Yes, but the trades that are losing are so big that they are offsetting the positive trades that we are seeing from the other traders, and it's ridiculous when you see it like this, but one big loss can actually wipe out your full capital that you have for trading.
100%.
Yeah, yeah.
Yeah.
Um, from your experience and from what you have seen in the market so far, and going into the relation of the inflation, the higher inflation in recent years that we have, following the pandemics, all the wars that are happening right now around the world, and from the previous, let's say, um, moments where crises have arisen from the markets. What do you think now the market will handle this? Where it will go? Maybe some thoughts on it. Interest rates, inflation, and quantitative easing as well. It's quite of the quantitative easing before, and now we have a huge inflation and rising interest rates. What do you think? Where the central banks will go from here? Because it's a little bit of a chaos at the moment, I think.
So I think you can go with a small immediate flow of what people are doing at the moment, or you can look at the backdrop, and I think the backdrop is going to give the bigger picture. So inflation is falling. I think we're back to 2% in the UK, having been at 13, 14%, I think, at the peaks, and that was only within the last 12 months. The US, much the same picture, not as drastic as the United Kingdom. Didn't go up as much, hasn't quite fallen back as much yet. None of the interest rates have moved apart from in Europe. I do appreciate a quarter point, I think, came off there last week. And I think that although everybody's holding steady because they got it so badly wrong, they're only reactive as central banks. There's a problem. They were so far too late in putting rates up that they had to really raise them. Now they're scared of pulling them down too quickly when inflation definitely hasn't been quashed. My view is expect what possibly they're not saying at the moment, which is that rates will come down a lot faster than you think. We've predicted, sorry to keep talking about the UK, but I think the UK has predicted a couple of rate cuts, possibly the same thing for the US back end of the year, September onwards. I just think that if inflation turns into a possible even more deflationary than 2% to 0% when their target is 2%, then they'll pull rates down really quickly. If that happens, um, the definition in a textbook would be that stimulates the economy, right? Pull the rates down, liquidity improves. You're not getting as good a yield in a savings account anymore, so you're going to go and take some more risk to find that. Thus, the stock market will go up. If, unless the market sees it as a panic, then oh crikey,
And see it like that. We've seen
the
it
rates
before.
are coming. Yeah, the rates are coming down so fast. They've got this wrong again. Sell. That could be the other side of the coin. My ultimate view is the market's telling you that this is a bull market. So for me, when you look at, I talk about the US indices, they lead, they're the reserve currency of the world. The world follows the Fed, not vice versa.
Yes.
So we look to them because they control, in effect, a lot of the world's money supply. Um, and when I look at the Nasdaq, and the dictionary definition of a bull market is not when it hits the bottom, because the Nasdaq had a bear market till last November.
Yes.
It fell 20 odd percent. Wasn't the fact that it reached a bottom there. It's the definition of a bull market is when it reaches a fresh high, and it did that, and it didn't just do
Yes,
it;
it
it
did.
bust through.
And what do you think? How long this bull market can last? Because we've seen it it's going on for the last 7 years, maybe. doesn't matter if,
S-
even we've seen some fluctuations and panics to the pandemic and wars that we have, unfortunately. But
Yeah.
still, the trend we see it is going up.
Yeah, and I don't think we need to be much more complicated about that. I can say there's been a bull market in the Nasdaq since last November, or whenever it reached a fresh peak, which is much quicker than what you're saying. But ultimately, since the global recession in 2008, 2009, when Bloomberg was predicting the cult of equity was dead. Well, you
Right.
look at the Nasdaq has performed since then, and we've been in an eternal bull market. So my overall view is it's hard to say buy the Nasdaq right now when it's at the top, when literally it's making new highs every day. Although ultimately, if it makes a new high every day, it's likely to make a new high tomorrow. That's the odds. But would we buy some weakness? Ultimately there will be a period where um, some bad news happens, some news where you'd want to be a risk-off environment, and you need to wait for that to play out. You know what they've been. You look at I mean, we've managed to absorb the Ukraine-Russia war. Now,
Right.
we've not forgotten about it, but the markets aren't talking about it anymore, and that's
Yes.
clear. We've got through the inflationary period. I believe the price of gas and in Europe, it's a big issue, but not anymore. You look at the price of it, it's actually lower or as low as when I was looking at it than it was at the
Countries
start.
basically found a way to offset the shortages that actually Russia was providing before.
Yeah, yeah. There are unfortunate problems going on in Israel right now, which is
Yes.
whatever you want to call it. I'll call it a war for the ease of this conversation.
Yes.
And the market's absorbed any of that. That's quite near quite a lot of the oil producing nations as well, which you would have thought would scare a few people. And anytime the oil price rises too much, you'll get recessions because the input costs are too much.
Exactly.
But the market's shaking all of this off. So they aren't the stories the market cares about. It's absorbed it and it's very resilient. And although, there's no free lunches, this, in my opinion, for Western stock markets, the US in particular, is a bull market. You just have to understand that there will be down periods of a month or two where
Of
that,
course.
that might be quite aggressive in a correction. But overall, um, with the spectre of rates to come down further, I would think the odds of higher equity markets over the coming years is quite high. Watch your news, of course. I mean, you've got US elections. Um, if anybody
That can
remembers,
move markets a lot, I think. And
yeah,
what's going on with the prosecution of President Trump in regards and in relation to his presidential candidacy now for the
I wonder
November.
if
I think
Americans care.
the elections are in November.
Yeah,
Yeah.
yeah, I think so too. Yeah, and
Um,
and I so when
mhm.
Trump got in 2016, I think, for the first term that he served, on the day that happened, and I was on the trading floor, the market
I
fell
was on the
something
trading
like,
floor as well, actually, and
yeah. So you're,
I
you
predicted that the Mexican peso would suffer a bit, and it happened at the same night, basically.
So he well, obviously Trump was not a fan, but the actual market itself, I think I can quote the Dow fell 10%, and in the course of the day, it recovered all of that and finished up on the day. So a hell of a ride for a trader if you like volatility, but
Yes,
markets don't often go the correct direction at first. And the market
definitely
did love Trump and was a bull market during his presidency, as it
yeah,
so continued with Biden. So
with Biden. Yeah,
I'm
but
not going to predict who's going to win that though.
yes, I think many traders take profit on it, or the other the other ones cut the losses. So that's why the initial reaction was different from what we've seen afterwards. And maybe it will be like this, but we are a new time now. Just going as a last question now for this podcast, for this episode. How do you
Yeah.
think the AI is impacting the overall bullishness of the markets when we see how Nvidia from nowhere just jumped out there, and now we have one of the most valuable companies in the world?
Well, that's a question with a few answers. So, first of all, I think those stocks are in vogue. So, if you look at Nvidia as the name, because it's now the biggest ever in the world, it's
Yes,
bigger than Apple. But if you
exactly.
look at other chip manufacturers, so I'm I haven't looked at Intel, but Broadcom is another one, right? It's a nondescript chip manufacturer. Share price has done incredibly well. But we've seen this before with weed stocks. We saw it with some of the technology stocks,
Yes.
Peloton during the. So they will have their day. I do think there's a lot to come from behind this. But this is the initial rush into the AI sector, and I think the AI sector is a multi-decade bull run, just like you've looked at Apple. If you looked at it when the iPhone was initially created, or even the iPod, and go, oh,
Yes.
well, that you got it. But then look 20 years on, and Nvidia is got the chips that well, they're certainly the most powerful chips in the sector which run that. I think it's probably got a long way to go, Nvidia. That might sound a bit shocking when you're looking at the jumps it's had already, but I predicted it a couple of years back. It'll need to consolidate somewhat and market catch up with it and be in a different phase maybe. But I don't see why Nvidia can't go a lot higher. A couple of quarters back they said something to the ilk of, "We're growing so fast we can't give you a prediction on what our output's going to be because even we don't know." Um,
So we
I
may
don't.
expect few splits of the shares, that's for sure, as we have seen
Well,
with Tesla and with the others as well.
yeah, yeah, I think so. I think they'll probably have to do that. How an AI, I'm unwilling to actually give a description of AI. I think it's very difficult to do so, but everything is now AI, or
It's
so it
same
appears to me.
as with the crypto, I think.
Yeah,
And if we go into a combination of AI and crypto, then it is totally the new world, definitely new generation. The kids that are 10, 15 now, they are the ones who will be using this the most, and it is the future. So yeah,
I agree.
we have a little bit more time to see how it will work, because it's AI at the moment, being into the retail space, let's say, it's at its inception, and maybe into the professional world it was available previously, but now we just have it in the last 1 2 years. But I think it will develop itself so much that at one point people may also lose jobs. So, which is something, it's another topic for another time.
Yeah,
Nick, thank you very much for your
pleasure.
participation in this podcast. I would ask you another thing. Just can you just give a few words about our for our traders? Something that you can say.
Yeah, I think I did this yesterday at a lunch, and people can come to you for courses and learn some very good structure about how to do things, what things are. But I think people should also know that they are themselves. They have their own risk tolerances. They have their own personalities. So you and I may look at the same thing and think it's going up or down and choose a different route to get there. And you're your own best trader. So you manage yourself and
Exactly.
you understand yourself better than anybody else. So take the rules that somebody like yourself provides and apply them to what you think and make them work for you.
Great stuff. Nick, thank you very much once again. Viewers, thank you for viewing this podcast. We will be coming back with a few episodes more from now on, and we'll bring hot topics as well. Thank you very much once again. And